Hi guys, welcome to Invest with George, where I look at company fundamentals and valuation. Today we're looking at Novo Nordisk, who's had a very difficult year. Market cap is 215 billion, enterprise value of 225 billion. So as you guys are probably aware, Novo Nordisk has had a difficult year with multiple profit warnings, which is partly the reason why it's had its share price drop so aggressively, as Eli Lilly has been winning market share in the GLP-1 space. I think there's an opportunity now as the valuation has been de-risked so significantly. So we're going to walk through the fundamentals, and we're also going to have a look at the company's valuation at the end. So as you can see, growth has come off a high point, growing 30 to 20% a year to 3% in 2026 is the expectation from the sell side. Profits and revenue have been growing steadily, but in 2025 and 2026 their growth has kind of slowed down due to them losing market share to Eli Lilly. So now's the time to look to see if the market is pricing Novo Nordisk shares too cheaply because of the uncertainty around market share and growth. So this was the third profit warning from Novo Nordisk this year, where they moved the guidance into the lower ranges. So for sales growth moving from 8 to 14% to 8 to 11%, and operating profit growth from 4 to 10% to 4 to 7%. So just a quick overview in the GLP-1 space of Novo Nordisk. They're a leader in diabetes and obesity care. However, they're losing share to Eli Lilly's superior GLP-1 drug, which has tirzepatide as the active ingredient. It's because they have better weight loss outcomes and they've got a more steady supply chain. When Novo Nordisk brought their GLP-1 drugs to market, there was a large supply shortage. And actually they pissed off a lot of doctors by telling them to prioritise certain patients. So in terms of execution, Novo Nordisk hasn't exactly been performing, which is partly why they replaced their CEO this year. Their key drugs, Wegovy and Ozempic, now account for 66% of Novo Nordisk's sales. On a forward basis, Novo Nordisk is trading at a P of 13x, an EV to EBITDA of 9.5x, and it has a free cash flow next year, or in the next 12 months, of 4.5%. So this is actually quite cheap for a company that is expected to grow its earnings longer term, which indicates that the market is pricing shares too cheaply. The recent deal between the US government and Eli Lilly and Novo Nordisk to lower the prices of their GLP-1 drugs from $500 to $1,000 to $150 to $350 is significant. However, in return, Eli Lilly and Novo Nordisk get the benefit that their GLP-1 drugs will be covered on Medicaid starting in 2026 and Medicare starting in 2027. And so it will cover these GLP-1 drugs for the first time for obesity patients, and that will massively expand the market. So while the price cut of these drugs is concerning and that will impact margins in the short term, the amount of patients for these GLP-1 drugs will massively increase. Furthermore, in 2026, there's also oral formulations of GLP-1s coming to market. So far, there's only been injectables, weekly injectables. Now, when they bring these oral formulations to the market, that's going to increase the convenience factor and increase adoption. So Novo and Lilly are expected to remain in a duopoly, with Lilly continuing to win market share, particularly in the injectable space. In terms of the sell side, they have 6 buy recommendations, 1 outperform, 3 hold and 2 sells. So this chart highlights obesity care for Novo Nordisk and how they've been losing market share over time since the time when they launched their drug, Wegovy, how much share they've lost to Eli Lilly, who now holds more than 50%. So as their market share has steadily been declining, the market is becoming more and more uncertain of Novo Nordisk and uncertain about how to price the company, which is why the valuation has been de-risked. However, that doesn't mean the company is inherently more risky. So Wegovy sales grew 18% year over year in Q3, and that's down from 67% in Q2. And Ozempic only grew 3%, and that's down from 15% in Q2. By contrast, Eli Lilly has posted triple-digit percentage growth for Zepbound and Mounjaro in the same quarter, further highlighting Eli Lilly's strength in the GLP-1 injectable space. However, next year, Novo Nordisk is bringing oral semaglutide to market in 25 milligrams, which is expected to come to market quicker or first before Eli Lilly's orforglipron, which is a dual agonist. It has 11% average weight loss in obesity patients, whereas oral semaglutide is a lot higher, around 17-16%. Because it's coming to market in 2026, it's expected to have an advantage, a first mover advantage in the oral GLP-1 space ahead of Eli Lilly, who is launching their drug in the middle or the summer of 2026. However, one of the benefits that orforglipron has is that you don't have to take it on an empty stomach, and you don't need to not eat for 30 minutes after you take it, which is the case for oral semaglutide. However, that doesn't necessarily mean that Eli Lilly is going to take the majority of market share in the oral space. Having oral semaglutide on market will definitely allow Novo Nordisk to grow their earnings and grow their market share. Also to note that the deal with the US government included provisions for GLP-1 pills as well as the GLP-1 injectables. Therefore, the price point for these orals will also be quite accessible and experience wide adoption, particularly among Medicaid and Medicare patients. In terms of injectables, however, Novo Nordisk is developing CagriSema, which is a combination of cagrilintide and semaglutide, and the average weight loss in trials was 20%. However, this was short of their expectation of 25%. And Lilly has a triple agonist in development called retatrutide, which is in phase 3, that demonstrated 24% weight loss in 48 weeks, which is a lot better. This is expected to come to market in 2027, and when it does, it will allow Eli Lilly to maintain their market-leading position in the GLP-1's injectable space. Longer term, Novo Nordisk is developing something called amycretin, which is targeting an amylin and GLP-1 hormone, and that showed weight loss of 13% in just 12 weeks. And that could be a competitor to orforglipron longer term. So Novo Nordisk definitely showed a bit more promise in terms of the pill space. However, the expectation is that for the foreseeable future, Eli Lilly and Novo Nordisk, who are developing key assets for the injectables and in pill formulation, will still be a duopoly for the foreseeable future, as they're the first to bring these drugs to market, both in injectable format and pill format. And the obesity market is still huge, so while price cuts are expected to eat into margins, the deal with the government to lower the price massively expands the market to Medicare and Medicaid, and will rapidly increase coverage and the addressable TAM. So with oral formulations as well coming to market, which increases the convenience factor, private and public insurance that cover these GLP-1 drugs will massively increase, which would lower this treatment gap and allow more Americans to be on a GLP-1 drug, as 40% of Americans are obese, but only 12% of Americans say they've actually taken a GLP-1 drug. These changes over the next few years could allow this figure to double in size. So I believe for the foreseeable future, Eli Lilly and Novo Nordisk will maintain a GLP-1 duopoly. By making these therapies affordable, they're arguably preempting potential future price regulation and locking in a duopoly in a market that is continuing to expand and grow. Margins are expected to take a hit in 2026, but the expectation is that Novo Nordisk's market share in the GLP-1 space will stabilise, maybe around 30 to 40%, and the analyst consensus is that the price cut will have a net long-term benefit for expanding the market due to wider adoption. So while the price is expected to come down, this is expected to be offset with volumes longer term. There are potential threats, but they're unlikely to break the duopoly in the short term. So Viking Therapeutics have this dual agonist on the market that's shown 14.7% weight loss in just 13 weeks. And that's an oral and injectable in development. Amgen also has a once monthly injection with promising results, 14.5% weight loss in just 12 weeks. And there's also Pfizer, who bought Mistera, outbidded Novo Nordisk. But I think they overpaid for this at $10 billion for a company that doesn't generate any revenue or profit and only has 2 GLP-1 assets in the pipeline. Merck and AstraZeneca also have GLP-1s in development, but overall these biotechs and pharmaceutical companies are still behind. Novo Nordisk and Eli Lilly, as coming first to market in the injectable and in pill format with GLP-1 drugs, they force the latecomers to prove greater efficacy and durability in trials, as well as being at an attractive price point. So Novo and Lilly still have a massive advantage. This is the historical EV to EBITDA multiple on a forward basis for Novo Nordisk and Eli Lilly over the last 5 years. And as you can see, they started at a similar point around a 15x multiple, but Eli Lilly has since grown and expanded as their market share has grown. And that's somewhat justified because the expectation is Eli Lilly will be growing faster than Novo Nordisk. And you can see Novo Nordisk has been trading at a much lower multiple because of their slower growth compared to Eli Lilly. However, there's an argument to be made that Novo is now trading at a very attractive valuation. So let's have a closer look at the valuation. So this is a DCF tool that I've used to make my own investment process much simpler. You can quickly put assumptions into this tool and see what it spits out. So Novo Nordisk has 4.4 billion shares outstanding. The share price is $48 a share. They have 10 billion in net debt. I'm going to use an exit multiple of 15x as they're still growing, discount rate of 9%, perpetual growth rate of 2.5, and in terms of EBITDA projections, I'm going to use sell-side analyst estimates. However, I'm going to actually grow the free cash flow faster because it's starting from a lower base in the following years. Next year, this is for 2026. I'm actually ignoring the amount of days left for this year in order to simplify the DCF process. So I'm going to say free cash flow because it's starting from a lower base because of capex spend. It's going to be growing 13% a year. Let's put 14%. And the EBITDA is going to be growing 10% yearly due to growth formulations. And while they're losing market share in the injectable space, the market is still expanding. And I think it will remain a duopoly between Eli Lilly and Novo Nordisk. So that's how I'm justifying these earnings growth rates. And if we press calculate, and you can see here we're getting an equity value of 303 billion, which means that based on, if you divide that by the current share count, you're getting $68 a share, which is around 40% upside based on these assumptions. So the way this model works is it's taking the free cash flows over this period, which is down here, and it's discounting them back based on the year by 8% or 9%, sorry. And then it's also adding up the terminal value, and it's doing two things to add up the terminal value. It's taking EBITDA for the 5th year, timesing it by 15, and then it's discounting this figure back by 9% over 5 years, and that's where you get this figure from, 342 billion. And then you're also doing a perpetual growth method where you're taking free cash flow for the 5th year, you're giving it a perpetual growth value, which gives it $277 billion, discount that back as well, and you get 180 billion. So you're using the medium, the price between these two numbers, to determine the present value of the terminal value. You add it to the present value of your free cash flows, you obviously subtract your net debt, and that's how you get your equity value. And if we scroll down, we also see a table, a sensitivity table showing what the valuation could be worth, the intrinsic value per share based on different assumptions. So as you go up in perpetual growth rate, it will have a higher value, and also based on the multiple, based on the assumptions and the growth values that I put, it can also increase. So if it's trading in the high teens and you have a perpetual growth rate of 2 to 3%, in the high teens it could be around $70 to $80 a share, roughly. From my perspective, I believe Novo Nordisk is slightly undervalued. I do believe these projections are fair, and so for that reason I do think the intrinsic value per share is trading at a discount based on this calculation. Therefore there is an opportunity to go and buy the shares at what could be a discounted price. This isn't financial advice, this is just showing you some of my workings and how I look at valuation and fundamentals. Always do your own research before investing in individual stocks. Thanks for watching guys, and I'll see you in the next video.